Alright folks, welcome back. This is a brand new week. This is Monday's daily upload for July 27th, 2020. Alright, so we have the lower time frame showing right away. And on the left hand side we have the dollar. And on the right hand side we have the euro versus the dollar. So we have a very nice run that took place. Overnight we took a run up into a fair value gap. Took two times to get into that, and consequent encroachment gap with a subsequent measure of distribution took place and took us underneath the weekly low that we were aiming for, and came back up, hit it, and then expanded again. So now the dollar has done its work on the downside, and on the euro we've seen that the weekly rejection block was swept. It's working the level now, but we still have an old weekly high at 1815. So we're going to give it a chance to see if it can muster the momentum to get up there, but be mindful because of where we have traded to on the dollar. Now we can enter a consolidation phase again. So just try not to be overzealous about expecting the market to do what it's been doing in recent days, which has been pretty phenomenal daily ranges. Nice little optimal trade entry in here for the New York session. This is 9:30, 9:15. Really nice little short-term trade there. Not a lot of pips, admittedly, but still a weekly objective for a new trader. So trading in here around, what would that be here? The opening on that candle, 1733. The low is 28. Yeah, so you get 73. I'm sorry, 1733. 1733 is an entry, and then looking for 75, and it's good enough for 25-30 pips easy, and that's fluffing the entry and fluffing the exit, not using the best case scenario. So that's still something that's noteworthy there. You can break that down on your own 5-minute charts and 1-minute charts again here, and the framework would have been, obviously we're bullish. We have a shallow run above the rejection block. It comes back down in. Time of day still allows for optimal trade entry, and then running an old high, offset distribution, and a standard deviation on the fib. So really nice objective seen there. Let's look at the hourly chart. And put this on the hourly as well. So that's a beautiful, beautiful delivery of price. Everything we were looking for, we got initially the 116.70, and then it vaulted through that, came back down in. Institutional order flow entry drill, that means the low of this candle here at 116.85 and 4 pipettes. If it trades to that price or just below it, you could be a buyer. After taking sell side liquidity out, it gives us a beautiful run into that, and then rejects, sends it higher, and then we're working that rejection block. So we do have a little bit of a fair value gap in here with an overlapping order block. If they want to take it down, if it hits here and rallies, and then after rallying, if it goes back below this fair value gap, after it shows a reaction now and trades back above the weekly rejection, if it trades back down, that's going to be bearish short term. Okay, so just keep that in mind. And on the hourly, on the dollar index, again, just a really nice delivery of price trading down through the weekly rejection and through the old weekly low. And finally, put this on the daily so you can get a really good view of what we've been calling for the last couple weeks. And here it is, just beautiful. Let's take this off so that we can appreciate it with a naked chart. Just a wonderful, wonderful delivery of price. And just real quick, we had GBP run its daily high as well, but I've been reluctant to do anything with this one, as I mentioned. Keep your eye up here. So if we do have continuation on the downside on dollar, say it accelerates, we do have a small fair value gap here on the dollar daily chart. So it can come back up and trade into that. It's better if it doesn't trade back to this low. Remember, we're not support broken turn resistance class here. Okay, it can trade up into this fair value gap, and I'd like to see it leave it open, like in other words, trade back above today's high. If it's going to be retracement, I'd rather not retrace altogether. But if it does need to retrace, it can take out today's high just by a little bit, maybe go consequent encroachment and leave this low untouched here on the 23rd of July. So if we can get that, that would be a potential continuation, and that would set up the stage for this fair value gap to be taken on cable, and then ultimately run the buy side liquidity resting above these relative equal highs. That's going to be it for today. I will touch base with you tomorrow. Until then, I wish good luck and good trading.